right, I really want to talk a little bit about the 10-year Treasury yield, and of course that's going to be super exciting. So before we get into this, and what appears to be a Trump administration failure on the 10-year Treasury yield to protect it and make progress against it, I want you to subscribe to the channel, because at the end of the day, we've got to get this message out to people, and the harder and faster you help me spank the YouTube algorithm, the faster they're going to show this content to people, so we can start making sure that people don't get themselves screwed over in this market and these worldwide games that are being played right now. Look, if you play bachata music, I'm gonna dance bachata. It's simple as that, right? If you play salsa music, I'm gonna dance salsa. I'm gonna try anyway, my salsa's terrible. But if you play a bond market crisis, Jerome's dancing liquidity on everyone. And I thought about this because I was like, okay, well, if the goal, because there's a lot of Bitcoin morons talking about the fact that, you know, the goal was to use tariffs to scare the markets, drive people into treasuries, and watch the treasury market go down so you can refinance $6 to $9 trillion worth of debt that needs refinancing, et cetera, et cetera, et cetera. This was the talk that was going on. That worked for about 4 days. And then what happened? China came in and sold $50 billion worth of treasuries to raise some capital. And it basically reversed the progress that the Trump administration was making on the 10-year yield. And now, you know, it's April 9th. Liberation Day was on April 2nd. 7 days later, and the 10-year Treasury yield is higher than where it was on April 2nd. So that got me thinking, like, okay, well, that's clearly not the game plan. Right? It's clearly not, it's not like the Trump administration is going to risk failing at this within 7 days, right? 4 or 5 trading sessions. And then I started thinking about it going, what if it's not as convoluted and complicated as what every one of these morons is trying to say it is? What if it is as simple as order out of chaos? The standard game plan that always works, order out of chaos. I believe, and you can tell me if I'm wrong, again, everyone at this point is making things up, right? We're all thinking here. We're all trying to come up with ideas. We're all trying to come up with what's going to happen here and what's happening, and we're all trying to cope with this market volatility. My thought process, when in times like that, I always like to go, okay, what's the simplest answer? We've dealt with the complicated answer. We're trying to get the Treasury yield down to try and refinance this debt. Oh well, oh shit. It's now higher than where it was. And so everyone sitting around in suits with books behind them is basically looking like a moron at this point. So what's the simplest answer? What could be the simplest thing that's going on? What could be like something that is like so stupid to think about that we've tried to come up with all these other cope things and it just might not be that? What is the absolute most simplest thing that can happen? Well, I thought about it. I was like, do I think that President Trump trusts that Jerome Powell will not let the American capital markets collapse? Yes, I believe that. I do not think that Jerome Powell is going to let the entire American capital market collapse. I don't think that's going to happen. That's number one. I think he's proven himself to President Trump in the last administration. And then this morning I woke up and I was like, well, every bond market right now is having trouble. The Chinese are having trouble, the UK is having trouble, the EU is having trouble, the US is having trouble, the 30 years, the 10 years are exploding, right? Straight vertical. Okay. Well, what could be a simple answer here? Again, go back to simplicity. Well, here's what I think could be happening, and it's the simplest answer to come out with. I think that a game of order out of chaos is being played here. I think President Trump's objectives are a fewfold. Number one, by the way, the Oval Office has never come out and said that we want to get Treasury yields down so we can refinance the debt. And until they tell us that, no one knows. Until the Treasury, until the president comes out and says, this is the goal and this is the plan, no one knows. So we're all, like I said, we're all hypothesizing here. But I'm trying to get down to the simplest hypothesis that I can think of. President Trump wants to accomplish a few things. Number one, the more I think about it, I think that Besant is been installed as someone with history and experience of blowing up the Bank of England. If I was to think about it in simplistic terms, I believe that President Trump blames China for the loss of the last election because of the flu season. And I think that Besant's objective from a conspiracy theory perspective is to bring China to its knees, right? So you fucked around last time, and now here you go. Maybe, right? It's pure conspiracy thinking. I think that President Trump wants to reorganize world trade to be more US-centric. I think that's number one. I think they want to remove the credibility of China as a stable currency alternative, which basically damages and completely tears apart BRICS, with China as the center of it. And I also think that President Trump believes in liquidity. I think he wants liquidity flowing around the world. So how do you achieve all of these things? This goes completely against what everyone is saying, so bear with me here as we talk about this, right? Yields are going vertical all around the world, right? And so what President Trump has basically delivered here is credibility for the Federal Reserve if you have a worldwide bond market crisis to actually lower the yields and pump liquidity. He has at the same time delivered a reorganized worldwide trade deal with the US becoming more and more powerful in that, which allows the US to negotiate better terms with anyone else who is a US adversary. He also gets collapsing inflation because you've got absolute fear in the markets, oil prices going down, et cetera, et cetera. And the most important thing with this one-off price shock, right? Tariffs are a price shock, they're not inflation. With a one-off price shock, you've destabilized worldwide markets, you've set the bond markets off, you've got China's credibility is ruined, and at the same time, you've offered credibility to the Federal Reserve to pump liquidity and lower rates so that in the future, Q3, Q4, whatever, in the future, you can legitimately refinance the $6 to $9 trillion worth of debt based on the Federal Reserve and not just scaring the living shit out of markets worldwide. So you can have low rates, higher markets, and higher asset prices. And at the same time, the $700 to $800 billion of US treasuries that China has been holding over the US's head has to be liquidated. They've been liquidating that anyway, right? But at this point, with the tariffs, you force them to actually drive that into the market even faster, which in essence, over the long term, yeah, right now it looks damaging and against the agenda, but in the long term, actually defangs China because they hold less power. Because if they're going to be making less they're going to be getting less of a trade deficit advantage, which means they can't buy as many treasuries, which means that if they dump their load onto the market at this point, they're now less powerful in the future to hold a grip over American capital markets and American liquidity. Well, you get all of that done by doing what? Driving the treasury yield as high as possible. Think about it. Everyone's saying that their goal is to get the treasury yield down. Well, what if the goal to get the treasury yield down is in the short term, drive the treasury yield as high as possible, which forces a market collapse, which Powell is going to take care of anyway, and also China's going to pump liquidity in the market, the EU is going to pump liquidity, which forces the US to pump liquidity in the market in the most credible way possible. And at the same time, you reorganize world trade towards the US side, and you depower China's grip over the US Treasury market because they have to dump their load into the market and they don't have enough. And then they also don't have a high enough deficit because of the reorganization of trade. Well, now you kind of get what you want, right? Without I just think this is the simplest thing. It's straight order out of chaos. And I think the plan, all these geniuses that we're talking about, the goal is to get the treasury yield down by putting on these tariffs. I think it might be the exact opposite. I want to know why this might be a wrong way of thinking. Because to me, it sounds like the simplest way to get the objectives, right? The objectives are America first trade. Good. Now, all these countries are going to come to the US to negotiate. I guarantee you, by the way, you had to put tariffs on the whole world because the last time you tried to put tariffs on China, they started moving factories to different places and trying to get tariff advantages from all these other places. You build the product in China, fly it to Vietnam, made in Vietnam, now you pay Vietnamese tariffs, not Chinese tariffs. And so you had to tariff everyone. And now when these countries come to you and say, we got to renegotiate these deals, well, one of the stipulations that you put in there is there's none of this China basically pretending that the product was actually made in Vietnam. If you're on our side, i.e. the US's side, this is going to be in those deals, right? And really what you're ending up with is a mafia brawl with the Team USA and Team China, right? And then if the US gets the overall advantage, well, now you can negotiate with China and put them, quote unquote, in their place a lot. I don't think the goal is to put Americans in Nike factories. I think what's going to end up happening here is that any country that joins Team USA is going to have, tariff-free trade with the stipulation that if we catch you allowing Chinese factories to come in and sort of just make it look like they are manufacturing in your country, you're going to get penalized. I think that's what's going to happen in the background. And in the same time, you drive the treasury yields through the roof, which destabilizes the treasury markets, which forces liquidity to be pumped all over the world, crashes inflation at the same time because of the fear tactics of the market. Oil prices are collapsing, all of that stuff's collapsing. So you collapse inflation, you give credibility to the Fed to print money and drive liquidity into the market. You've got liquidity on the China side. China's going to be forced to devalue their currency by 20 to 40%, which basically ruins the credibility of China in the BRICS. You get rid of all of that, and it all starts with driving the treasury yields up, not down. What if that's how simple this is? And what does that mean for Bitcoin? What it means for Bitcoin is you should be more bullish than ever now because you know liquidity is coming. As liquidity comes into a market that's severely and increasingly more educated on Bitcoin, that liquidity will find more of that liquidity will find its way into Bitcoin and drive the price higher than it was going to drive it. I don't know. That seems to be like the simplest thing that could happen here. But you got to own Bitcoin at this point. This is not a time to panic. This is a time to look at this and go, we need to own Bitcoin, as much Bitcoin as possible, because ultimately there's only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.